Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, February 20th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to see bullish uptrending behavior. You can see a very clear uptrend here overall. The previous session was a sideways doji day here after Friday's rally. And now we have an inside day developing, so very narrow overnight range. As a matter of fact, only 9 points of overnight range. That is basically 31% of the 10-day average. The 10-day average being 29.43 points per day. The 5-day average being 33.1 points per day. So again, you can see volatility is clearly dropping right now in the single digits as we head into RTH. Very, very narrow trading. If you take a look at the NQ, very similar, but for the most part, what we're looking at here is a very clean uptrend, very clearly bullish uptrending market with the PIMAs being defended. I would say even if price breaks down below the previous session's low and drops toward 27.40, that could still be an opportunity for bulls to defend and return this higher. I think overall, the market continues to push higher toward the 28 to 28.20 zone of resistance. And I think until that area is tested, we're going to continue marching that way. Even if we pull back, it's only been 1 or 2 day pullbacks in this uptrend, and then it turns right back around and continues higher. So again, very strong market. Even if we pull back toward 27.40s, it could still be a buying opportunity for a continuation higher. Here's a look at the NQ. Very similar price action, uptrending market. Continues to be above the 8-period average, still hasn't reached resistance, so I still believe the market's on a path toward resistance. Even if we were to pull back, say below 70.20 into 7K, that could still be a great opportunity for bulls to defend and push this thing higher. So that's going to be something to watch out here as we head into the rest of the week. Right now only trading 30% of ADR, which is less than the ES is 31% of ADR, 27.75 points of range today. It's been averaging about 91.75, so very, very narrow price action with room to expand the range today. If we take a look at crude oil, crude has been very bullish. We had the rejection here, which was a fantastic lower low failure in the intraday, and then we've continued higher, failed new low again and continued higher. And now price is holding above the previous month's high, and again above those 55s. Very important. I mentioned before that this could be an expanding type of range here, and on this upper edge, if it starts to reject, perhaps we come back down toward 51s to take out the recent lows, and then that could bring things back up. So right now, this market right here in another sideways type of inside range, not quite super inside, but almost there. Trading 52% of average, 81 ticks of range today, very narrow still. But overall, this market has been very bullish. So if this thing is going to push lower, it needs to break below 55.40, 55.50. That would open up room to run to the downside. Unless it can fail below that level, this market still remains bullish. And so any pullback to that zone could still be bought as this thing continues to trend higher. So a break and a hold below 55.50 would open up more downside in the days ahead. Whether that happens today or 2 or 3 days from now, we'll see. But right now the market's range bound until then. Taking a look at gold here, this one has been very bullish. Again, we knew that 1300, a retest or a pullback to that zone, could provide a bounce into 1350 to 1360. Today's high is 1349.80. It's gotten a solid move right there to the edge of the 1350s off the 1304.70s. This is only 3.5 days in the making. Very solid move. Yesterday was very, very strong and pushed price to the 1330s. That was a transitional day from this little distribution to the next. So again, any pullback now to 1330 could be a great continuation play in the near term toward 1360. So overall, this market continues higher toward that higher time frame 1360 we've talked about for quite some time. Here is the upper level right there, 1360. Down here we were near 1200 and formed this rounded bottom. This is when we called the low in August and said now we likely come back to 1287 by the end of the year with a shot to continue to 1360. So this is almost completed the move. 1375 would be the upper edge of the CLVN and resistance up there, which is held for many years. Not expected to go beyond that level at all. Instead, another rejection back down toward 1300 likely will be in play. So again, further up trending behavior toward 1360 and as high as 1375. Once a rejection occurs up there, we could be headed right back to 1300. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.